So will that housing market bubble burst? In this video, I'll be looking at existing market conditions and the market conditions that have to exist for that housing bubble that we're seeing to burst in 2021. Stay tuned, you'll see I'm Kiwi. I'm Kiwi the Coast, your luxury real estate specialist, helping you maximize and sell the value of your coastal home. Now, if you're new to the channel, don't forget to subscribe. Let's dive in. So will that housing bubble burst in 2021? So first of all, what do we mean by a housing bubble? This is when an asset, like real estate, like homes, the price exceeds the true value. The market shifts suddenly, buyers are in control, and sellers have got to lower their prices to compete and get their home sold. Of course, the big question on everybody's lips is, will this housing market remain unscathed as this virus goes away? Okay, number one, it's really good news, bad news right now. Now, bad news is in those dense areas like Los Angeles and the Bay Area, where we're starting to see that COVID flight, people vacating those denser areas because they've realized they don't have to work and commute to the office. So they've been escaping to areas like Orange County where we've got more open space, the houses are a little more affordable, and the family environs are good, and for people working at home, it's a good fit. So that COVID flight, as we call it, or executive flight from the big city centres where they've perceived to have less safety and they want more security down here, those areas are more open to a housing correction for sure. But the good news is that the lack of supply, especially in our marketplace, is likely to put a floor under those prices for the foreseeable future. Now, remember back in March 2020, when the lockdown started, there was a lot of nervousness out there. So what did the home sellers do? Well, they took their homes off the market, they stood on the sidelines, buyers did the same, everybody was nervous, the media was talking about it like crazy. So what happened? Housing volume and inventory both dropped as sellers and buyers decided to wait out the pandemic. Fast forward to the summer of 2020, low interest rates propelled those buyers back into the marketplace. Demand continued to surpass supply across the nation, and inventory fell, and guess what? Prices went up. Now, if there's a little bit of bad news here, in Orange County, those home prices right now are pretty high, and there's some speculation that they're too high. But there's other factors we need to consider. But there's good news too. We don't need a major crash to correct the overpricing. Here's why. The 2020 surprisingly strong housing market did seem counterintuitive at the time as COVID impacted the economy. But we now know the COVID flight, the flight of executives out of the big centers, the work at home orders, and also that low interest rate helped to balloon buyer demand. And remember too, a 1% drop in those interest rates that occurred meant that those buyers now had 10% more buying power. So gone are the easy lending standards that were prevalent there in the early to mid 2000s, which resulted really in the big crisis of 2008. And now you actually have to qualify for a loan, and that's the other bit of good news. Borrowers today tend to be low risk because they've got to have good credit, you've actually got to have a down payment, you've got to show source of repayment. So all of those things is a good sign that the conditions that existed in the last big crash are not existing today. So market condition number 3, and let's talk about forbearance. Now, you remember the CARES Act that was passed last year? Well, now in 2021, it's payback time. So of course, many feared that when the forbearance came due in 2021, there'd be a huge number of foreclosures on the market, mimicking what happened back in 2008. Well, that is just not true. Hey, let's look at the numbers. May 2020, there were over 4.3 million homes or loans that were in trouble in foreclosure, that needed forbearance essentially. Now, by October, of course, that number had dropped to 3 million. Things were improving. And we have to compare that with what happened in 2008, where there were over 10 million loans in foreclosure. Now in 2021, with the end of forbearance, we've got increased equity as the home values have shot up. So those sellers that have been in trouble have the opportunity to sell. And also the sellers that were behind, who have now got their jobs back with the improving job market, are now able to catch up. Market condition number 4, this imbalance between supply and demand is here to stay. Remember, for a housing bubble to burst, what needs to occur, we need rapid increase of inventory and a huge drop-off in demand, and that is just not occurring. Even in our marketplace, we're seeing record low inventory up there in Newport Coast. So if our current conditions of low supply, high demand continue in place, very unlikely that we're going to have a crash in 2021. Also, those interest rates going to stay low, aren't they? Because this government is trying to improve the economy. They're not likely to raise interest rates while they're trying to fix all the impacts from the pandemic. Plus the good news, all those vaccines coming out, people back to work, people being safe, that's good news for our housing market as well. So the bottom line, what does all this mean? Firstly, we're not likely to forget the pain and suffering that occurred during the Great Recession era, and it's not likely to be repeated in the pandemic era. The next is interest rates. Hey, they're going to continue to stay low in the foreseeable future as the current administration is working hard to improve the economy. Don't see a change there. It's hard to get a mortgage is the next item. Hey, you actually have to qualify, as we mentioned, down payment, credit, and reserves, and the ability to repay that loan are important, so there's no easy money out there. That is good because the buyers are, of course, low-risk buyers today. Housing remains in short supply, of course, and those buyers are still chasing those low interest rates, which are historically low. We continue to see that demand in our own marketplace here in Newport Coast. But do keep an eye on what's going on in 2021, because if the recovery from the pandemic takes too long, the vaccines are too slow in getting out there, this could have some impacts on the housing. Overall, pretty optimistic. Final note, housing cyclic. We've been through a lot of these ups and downs through every decade, and the overall impact is that home prices in Orange County always have gone up, even though we've had those ups and downs. You buyers out there, look, jump in, nail and get those low interest rates while you can, because they're not going to be around forever. And you sellers out there, look, if you're moving, retiring, now's the time to take your profit and cash out. Hey, I hope you found all that information valuable.
Now it's time for the Kiwi Squeeze.
And now it's time for the Kiwi Squeeze, and this is where I ask you for the juice. So the question is, did you have a loan that was in forbearance? Were you able to catch up, or did you have to sell your home? Do share, comment down below, and I just can't wait to read your responses. All right, guys, continue your real estate education here. Tap or click on the videos. We've got a great series for you. You're going to sell your home for more in less time. I'm going to help you do it, and we'll see you on the next video. Vroom.